Hello, and our team, Maria and Anastasia, want to provide your attention with an analysis of the Finnish company Tikkurila. It is a leader in the countries of European Union and Russian Federation and has operated since 1862 and has 333 employees at her disposal. Here you can see the content of our presentation. So, first, our goals which we want to achieve at the end of this work are to analyze the financial situation of the company and find possible ways for further growth. A little bit about the company. Tikkurila is a Nordic paint company whose products are manufactured of carefully chosen raw materials that meet the highest quality standards. Company's vision is to create surfaces that makes a difference with expertise that spans decades. They are developed premium products and services that provide their customers with quality that will stand the test of the time and weather. Tikkurila embrace their market-leading brands and pride themselves on innovation that is rooted in tradition but looks far into the future. Here I'm gonna tell you about essential things in preliminary research. First, strategy. Their strategy is offering competitive surface treatment solution and a desire to improve the overall user experience and efficiency of their customers. But company mentioned in their annual report that there will be some changes in 2019. Next, megatrends. We can assume that nowadays almost every big company follows same megatrends such as urbanization, climate change, growing middle class, and digitalization. Tikkurila not the only one in the market. They have competitors. Main competitor is AkzoNobel. But here you can see their advantages. Due to them, Tikkurila is still the leading company. Talking about equity, it's decreased, and for the end of 2018, equity was 150.1 million euros. We will tell you about it later on in other researches. So, here you can see the geographical spread of Tikkurila. Tikkurila have distribution centers, sales centers, training centers all over the European Union, in Kazakhstan, in China, and in Russia. But still, Tikkurila have a leading positions in Finland, Poland, Sweden, Baltic countries, and Russian Federation. Let's take a look on horizontal analysis. Tikkurila's group revenue for the last year was 561.5 million euros, which is less by 3.6% than in 2017. Such negative impact caused by unavoidable exchange rate fluctuation as well as disinvestments of business operations. Higher sales volumes as well as price increases and product mix increased revenue. Conversely, the company's operating profit improved to 26.5 million euros in comparison with 19.3 million euros. The difference between 2017 and 2018 is 37.3 percentages. According to Tikkurila Group's annual report of 2018, the main reason of this change are discontinuation of business operations in Germany, reduction of personnel, and moving production from Denmark to other locations. Due to the difference in exchange rate fluctuation, the sales revenue reserved from companies' operations areas varies. In European countries, especially in Poland and Baltic region, it has been increased. However, at the same time, sales volume in Russian Federation reduced. The unstable rate of the currency affected by sanctions imposed against Russia negatively reflected the company's performance indicators. In parallel, the sales revenue increased in Russia, increased owing to shifting the production to the premium segment.
To show the relative size of the different accounts of a financial statement, we use vertical analysis, where all accounts are presented as a percentage of total sales number. As you see, even revenue reduced by 20 millions, the net profit was 14 and 6 of the sales, which is 4 and 6 more in comparison with the previous year. Variable and fixed cost were lower in 2018, mostly thanks to Tikkurila efficiency program. For conducting the key ratio analysis, we used company balance sheet, which is presented in group annual report. The first ration is a profitability analysis, consisting of analysis against sales and analysis against capital employed. This efficiency program, which started in October, includes reduction of personnel and closing of several production lines. It has already shown positive impact on profitability indicators. However, according to Group Annual Report, the full impact will be more visible in the end of 2019. Contribution margin and gross margin percentage haven't changed much because of high level of raw material cost, but rigid cost control and optimization of manufacturing and supply chain processes have generated higher net profit margin, which was 2 and 6% in 2018. Return on investment was 6 and 6% in 2018, which is an average index. In comparison with previous period, it increased by 2%. So it means that the company financed its assets more sensible. Return of capital employed show even better result, increasing by 4%. It caused by reduction in debts and other liabilities. Next, efficiency. Stock days reduced for the previous period by 4 days. However, it is 14 days more than target amount. Receivable days stay the same. It is 55, and it is twice more than target amount. The company used different payment terms for its customer, depending on operation area and customer-specific term and conditions. Liquidity of Tikkurila stayed the same good level for this period. The cash flow that has direct impact on liquidity of the company, including in current assets, has improved in 2018. Company's cash flow in total was 35 and 5, which is twice as much as for the previous year. It has been achieved thanks to reduction of paid taxes, enterprise resource planning system implementation cost, and other cost control, as well as lower working capital. The reason of working capital improvement is a reduction of inventory. Capital structure. The biggest changes for the previous period can be seen in equity ratio, which is reduced by 4%. The reason is an equity reduction caused by unfavorable results for the last year. So to conclude, even if Tikkurila had dropped in earnings caused by currency fluctuation and divestment company's financial position and liquidity remained at a good level. During the review period, operation profit increased to 26.5 million, which accounted for 4 and 7% of revenue, thanks to changes in strategy, such as relocated of production, personnel reduction, and disconsolidation of German business operations. We would recommend pay more attention on exchange rate differences and recognize beforehand possible negative effects, and implement efficiency exchange rate risk management. And the second recommendation is to continue to invest more in development of digital channels, since nowadays they are essential for example, in order processing or in customer data sharing.